What's up, YouTube? I'm just tapping in, family. The stocks I'm going to talk to you all about today are beginning to break down despite today's pop. And so when stocks go down, that means it's a chance to go shopping, okay? Especially if you have a long-term outlook. So if I got any long-term investors that is looking to establish positions, again, you don't have to get in here, but now is a good time to start getting your plan together because stocks are beginning to break down across the board, but some of the big dogs is beginning to really show signs of cracking, and that may be an opportunity sometime in the new year. Okay, so let's go ahead and dive into it. All right, guys, I got Apple here pulled up, and as you can see, they are clearly under our level of 140. Okay, sitting down here at 129.52. They had a nice day today, up nearly 3%, around that 129, 130 level. Okay, but again, they are breaking down, and when Apple breaks down, that's a sign that more trouble is on the way. Okay, because Apple is the stock, it's the one stock that has been propping the market up the entire year. Okay, but now that it's beginning to finally crack, okay, if it doesn't catch a bid somewhere in the 120s, guys, again, expect 2023, at least the start of the year, meaning the first quarter, January, February, March, expect to see even lower lows, which means you can get this at an even better price. Okay, but look at this, guys. On the week, it is down 1%. On the month, it is down 8.5%. In 3 months, over the past 3 months, is down 11%. And as you see, I have up here, it is down nearly 30% on the year. Okay, this is what you get in a bear market. This is what you get when you have high inflation, when you have high interest rates. Okay, so understand, although this is an outlier, this comes to territory, and even the big dog Apple is not immune to it. Okay, so you have to understand, although a lot of people see this as a safe haven and they run to pile in, a lot of times, guys, it's going to hold up better than most. That is facts. However, 30% is still 30%. Okay, now that doesn't mean one has to be down 30%, because if you are like me, for example, my average cost at Apple begins at around, I start nibbling at 140. I go a little bit heavier at 135. I go extremely heavy at 120, at the 120. So my average cost may be in that 127, 120. So I may be, somebody like myself, may be just right at break even, up 1% in this particular play because of where I choose to enter at. So never get the game twisted. Yes, on the year from the high, this may be down, what, 27.78%. That doesn't mean you bought it at the high. Okay, so don't let these numbers, again, tell a story that's untrue for your investment journey. But yeah, on the year, this was a down year to date from where it was and where the high was at the previous year. However, you have to have a plan. You have to have entry levels where you want to start establishing your positions. And you guys know around here, 140 and below. So ideally, we love 120. If we ever get below 120 and we see 112, 108, if we get to those levels, guys, it's just a steal at that point. Okay, but again, you can't time a bottom. So what do? You begin to dollar cost average your way in, just a little bit at 140, a little bit at 135, a little bit at 130. But then as soon as it cracks that 130 level, boom, you start going a little heavier. I hope that makes sense for those of you that likes to build out your play for the long term. And this principle can be applied whether it's Apple or any other stock, Microsoft, Google, Amazon. Okay, check this out, guys. We have Tesla, ticker symbol TSLA, sitting at 122.64 at the time of this recording. It was up nearly 10% today. It had an 8% day today, and that's after what, 7 consecutive days of selling off, 8 days of selling off. And so today was a pretty good day for Tesla. It was long overdue because it is oversold. So these are what I'm telling you guys. You will have a falling knife that will eventually catch a bid. That means a dead cat bounce, a short-term bounce, okay? A little small rally. Okay, now tomorrow, if it doesn't continue, if there doesn't have follow through, look for this to come right back down to 112 and below, okay? But on the week, this is down 2.9% and 3%. On the month, this is down 33%. So this is down in 1 month what Apple is down in the whole year. Something to think about, okay? In 3 months, this is down 56%. And if we go 1 year out, this is down 66.5%. Okay, now this is Tesla's worst year, worst quarter, and worst month since a very long time, okay? Again, these things happen when leadership gets unfocused. These things happen in a bear market. These things happen in a recession. These things happen when inflation rates and interest rates are running rampant, okay? So understand the lay of the land and decide for yourself. If you see this as an opportunity, then this may be something you guys can get into. Again, once it's done falling, you can't time a bottom, so you have to be strategic. I get asked all the time, when do you like Tesla? Okay, 140 was my level to start touching this stock if you were a long-term investor. So if I liked it at 140, I gotta love it at 120, okay? And when it was 112, we call these plays out every morning in the Discord, okay? So please join that if you haven't already. But at 112, 108, all those levels, if this is something you see for long-term, those are levels you can nibble at as well. You can establish small positions, one or two shares, because eventually the fair value for this is around $60, $61. So that's another 50% fall from here if it was to actually get to fair value, okay? So again, you want to be strategic when you are building out your plays, especially if you are trying to build wealth through the stock market, okay? So again, guys, some of your big dogs are beginning to fall. They are beginning to crack. They were once holding up the market. They was once prepping up a market, but now you kind of reaching that level and that stage of capitulation when they begin to crumble themselves, okay? So just know that. Matter of fact, I want to share this with you guys, okay? You oftentimes have on your journey these periods that you go through, and I want you guys to check this out, okay? If I can get this pulled up for you all. I want you guys to check out this right here, okay? This is a psychology of a market cycle, okay? You have at points in times, look at the top, you have euphoria. I'm a genius. We're all going to the moon. We're going to be rich. This is how people feel when the market is going up, okay? But then you start having, when the market starts to go down, first you get complacent. We just need to cool off for the next rally. You not believing, man, Chris don't know what he's talking about. Coach said Tesla gonna come to 140. No, it'll never come that low. Okay, you getting complacent, not thinking that things can happen, not thinking these stocks can go lower because they may have sold off already. Or I see people thinking something that is 52-week low, that it can't go down lower, okay? Then anxiety kicks in. Why am I getting margin called? This dip is taking longer than expected. Then we start being in denial, okay? Let me know if any of you guys have seen the denial phase. My investments are with great companies. They will come back, okay? Thinking like Apple. I know everybody love Apple. So you sometimes think, oh, you ain't gotta maintain that like you maintain other things because it's Apple or it's Microsoft or it's Amazon or it's Tesla. And then you see Tesla down 66%. You see Apple this year down 30%. You still have to manage your risks. You still have to protect yourself using your stop losses, okay? And then after the denial phase, you have panic. Everyone is selling, I need to get out. And then that begets more selling. That's how you get that falling knife scenario that we talked about with Tesla, okay? Then you get angry, okay? Look at anger down here, okay? Who shorted the market? Why did the government allow this to happen? You get capitulation. I'm getting 100% out of the market. I can't afford it. I hate the stock market. It's rigged. You start hearing all that kind of stuff. And so these are real psychological phases that the retail investor, that the human in general just go through on your journey, okay? So let me know if you have been at any of these stages on your journey, okay? Then you have depression. My retirement money is lost, or if you were trying to save up for a house, or if you were trying to buy a car, if you were trying to pay off your student loans, how can we pay for all this new stuff? I'm an idiot. I don't know what I'm doing. I can't ever get a trade right. And then you go to disbelief. This is a sucker's rally. You know what I'm saying? You start not believing nothing that happens in the market. That's just the psychology that the market goes through, okay? The psychology of a market cycle. So you will experience all of these ebbs and flows on your journey, okay? It comes to territory. It's part of the game, okay? Know that. Embrace that, understand that. All right, with that being said, guys, I just wanted to get back in the thick of things. Okay, it's been a beautiful vacation. Celebrated my wife's birthday this whole week. Okay, it's her birthday weekend, so you guys know we getting it in. But I still want to tap in with you guys and bring you guys some content and keep you guys updated on what's happening in the market, especially as it relates to moves you might be anticipating, at least for the future, for my long-term players. All right, with that being said, guys, we make videos like this every day, so if you like this one, make sure you check out the next one. Remember, most people see the end result, very few consider the journey. So do me a favor, don't forget to like, subscribe to the channel. Make sure you guys grab some free stock using my link below, and I'll catch you all in the next one. Peace.